Thank you for being with us, sharing your lunch with us today, and learning and talking about finance. My name is Nelly Nelson. I'm the Family and Consumer Science Agent in IFAS with the University of Florida. Dr. Gilling, do you want to introduce yourself?
Good afternoon. I'm Marty Gillen. I'm a professor in Family, Youth, and Community Sciences here on campus within IFAS.
So you have heard we have talked about IFAS. IFAS is a part of the University of Florida, and the mission that we have is to develop knowledge in agricultural, human, and natural resource, and to make that knowledge accessible to sustain and enhance the quality of human life. And we are in every county in Florida, so that means we are in 67 counties here, and we have central resource around the state and the college, like Dr. Gillian has mentioned. The main purpose is that we are an equal opportunity institution. So aging, we are going to start to talking to see why is happening when we are aging, what are the things that happen, reference to our retirement, what is going. So according to the Census Bureau, the age for elderly population is expected to be more than double by 2050, reaching almost 88 million. That means over 85% of the population will quadruple to 19 million. Currently, Florida ranks first in the United States in the percentage of the population who are full-time and seasonal residents over the age of 65. So one of the things that we are going to be start to thinking with our families, ourselves, are the topic addressed in the slide. Health and medical care, family relationships, economical concerns, caregiving, home modifications, retirement. For the chat that you guys, the questions that Patricia asked in the beginning, the individuals that are close to retirement, I feel jealous. Congratulations to you, and nutrition and diet. So when we are talking about money solutions, we need to know certain facts and tips. Cash reserves refer to the funds a company of an individual maintains to meet short-term and emergency funding needs. Short-term investments that enable customers to quickly access their money, often in exchange for a lower rate of return, can also be referred to as a cash reserves. The significant difference between equity and fixed income markets include the types of securities traded. This could be market accessibility, risk levels, expected returns, investor goals, and the strategies employed by market participants. Of course, we should have a life and health insurance. Sometimes the employer provides that. If no, individuals needs to have individual insurance in this area. And something that we are thinking in the moment, why we need to start to have a power of attorney or a living will or a living trust. If we are parents, if we have minors, and in our household, that is something that we need to start to consider in that matter. Right now, in 2025, a lot of people say it's not enough money. The situation to live in is too complicated. Everything is too expensive. Something that we need to see is the contribution to our 401k plan and take advantage of the employer matches. When the employer has this option as a new employee that we are signing with a company, that is something that we need to take advantage. And something that as well that is recommended is an individual retirement account like an IRA, known as a arrangement for the IRS, is a long-term tax advance savings account that individuals with earned income can use to save for the future. You can open an IRA through a bank, an investment company, an online brokerage, or a personal broker. The average monthly payout or retirement in 2024, I want to let you guys know, was $1,975. Something related with money problems is as well, like receiving an alarm or some that payouts from pension plans or inheritance can also be a problem for older adults. Inflation can affect your retirement overall by devaluing what you have saved. For example, if you have planned that you need like $50,000 a year in retirement to live comfortable, in 20 years, with just 3% of inflation yearly, that 50,000 is only going to be valued at 27,685 in today's dollars. That is shocking. The flip side of inflation and deflation, the average female life expectancy, if we are talking about genders, for a female is 85. It's slightly more than the average 82 years old for a male. Retirees become targets to a number of consumer frauds. Something that we need to be very, very careful is IRS doesn't going to be calling your home. Sheriff department doesn't going to be calling your calls. It's on a scam that is happening in a few states right now. And my base is Manatee County. That is something that the sheriff department has sending so many times on social media, as well as the courthouse. Those are scams. Please don't provide your social security, your phone, that information. Don't answer nothing of these individuals' questions. Please go directly to the agency that are saying supposedly they are calling, that you are more sure. Another thing that is included now with the AI is the telemarketing scams, phony health products, and insurance and medical fraud. So be very aware of this, as well that certain extortions with your family members, with the voice facilitation for AI. A lot of individuals are receiving calls that are frightening, and they think that a family member, there are no reals. Call directly the family member to verify this. Planning can help us control some financial issues that may arise. The following are some money solutions that can help you plan and manage your successful retirement. After retirement, it is crucial to have sufficient funds available to cover your bills. This includes checking accounts with interest, credit union accounts. If you have a younger grandchild or kid, please advise them to open an account with this institution, and market funds. A limited number of monthly transactions are included with this option. You guys need to be very aware of this. You should have an emergency, and everyone, we should have an emergency funding for at least 6 months of your living expenses in reserves that can be easily accessed. That means that you can liquidate quickly. If we are talking about fixed and equity access, these are the examples that how are they determined. And your savings for retirement is 20% pre-tax your income. A good plan for retirement income includes a balance of both fixed and equity assets. For beginning employees, somebody that is start working new, is recommended to save your retirement for this 20% of your pre-tax income. Fixed assets are a term used in accounting to describe assets and property that cannot be easily converted into cash. They are contrasted with current assets, such as cash, bank accounts, or short-term debts receivable. In most cases, only tangible assets are referred to be as fixed. These are assets that protect against deflation. Equity assets are values that are free from debt or obligations, representing the owner's stake. Equity assets are assets that protect against inflation. When you retire, you may have several types of insurance. The types of insurance you will be primarily concerned about during retirement are life, health, property, and liability, and long-term care, something that we should be doing every year is review the policy, the coverage, the individuals that we have coverage, and please don't have gaps in the coverage and verify the rate for every insurance that you have. A lot of people sometimes don't verify this yearly and update your beneficiaries. When we are talking about life insurance, as we age, there is generally less need for life insurance. This is specifically true if you no longer have dependents. You should access your needs and review your life insurance policy annually, as I mentioned before. When we have our insurance, we need to start to see, because it depends on our employee, what kind of insurance we have, and there are certain policies that we can pay extra, like cancer cover costs. Those are things additionals that we need to pay as employees. For as long as you have assets, you will need to have property and liability insurance. That's something that we need to be very, very sure about this. And remember to review your policy annually as well. Every kind of policy that we have, we need to review this annually. Ensure that your assets, your risks, and develop a plan for any necessary changes that you have. When we are talking about long-term care insurance, the longer you live, the more likely you will need long-term care. Consider family tendency for life expectancy. That change, it depends on our families and sometimes the countries that we are origin from and we are living as well. Women may need long-term care insurance more than men because they generally live longer. I'm sorry, gentlemen. If you have a spouse, adult children, or other family members who can care for you at home, you might not need some types of long-term care services. You may have a greater need for long-term care if you have a chronic disease or debilitating health conditions run in your family. Dr. Gillen, I'm going to stop and you can continue with the presentation.
Thank you. You should be able to see the full PowerPoint now. Good. Thank you. Okay, so now thinking about estate planning. So when we think about estate planning, we're looking at a plan to be able to transfer our assets, to manage our assets if we become incapacitated, to care for any minor children, and to manage our health care. And you might think, okay, well, I'm getting older. I might not have minor children. Maybe you don't, but some people still do. I'll give myself as an example. I literally turned 50 today. Today's my birthday, 50 years old, so a big milestone there. My husband is 60, and we have a 7-year-old and a 9-year-old. Both adopted, but they're still got to have care if something happens to us. And we're also seeing a large number of grandparents raise their grandchildren today, too. So thinking about that perspective too, and how that truly has increased. So we'll talk about, the variation and how this looks different for families and all of the kind of the considerations you want to think about, because it could look different based on your stage of life, for example, based on your age, based on your marital status, based on your income, the different types of property that you've acquired throughout your life, and there's a whole host of other circumstances. So the gist is it's very unique to the individual and to the individual family. It also varies based on our family values. So for some people, they may want to pass their home to their children. Other people may want to sell the home to be able to pay for some long-term care assistance. So, lots of things to think about when we look at estate planning. So the first thing we're going to want to do is take an inventory of everything we own. So taking an inventory of all of our assets is really a good place to start. And our assets include our personal property, investments, retirement savings, insurance policies, real estate, and any business interests that we might have. And then we get to think about, who do we want to inherit our assets? So, what's going to actually happen to it? And I can tell you, excuse me, when you think about dishes, different things like that, just our personal property, we've seen a huge generational shift that our children generally do not want that kind of stuff passed on to them. So thinking then, what are we going to do with things to downsize along the way? Or if they really do have a specific thing they want passed on to them, having those conversations and planning ahead of time. So when we look at the elements of an estate plan, you have an advance directive, a will, and maybe sometimes a trust. So when you think about putting together your estate plan, you want to think about federal laws and state laws that's going to govern estates. And state laws do vary. So you may have been in one state while you were working, and then possibly maybe you want to retire and go to another state. So you'd want to make sure you pay attention to those laws as well. And then people often delay preparing these advanced directives until later in life, but they're really critical at all points of your life. Something could happen to us at any point in time, and we don't really know when that's going to happen. But if we do have these plans in place, then it leaves people knowing what we want to have done versus trying to do their best guess in a very emotional state to make decisions that they think we may have wanted. So when we look at some of these with the advanced directives, we're thinking financial, medical, or other decisions if you become mentally incompetent or unable to communicate your wishes. So, for example, I have some advanced directives that my mother has done that puts me in the place to be able to make decisions for her health, for her finances, all of that, in cases she becomes incapacitated. And I know her wishes and what she wants to do. And we're going to talk a little deeper about these as well. So when you look at the healthcare advances, again, a lot of folks thinks that's just for older adults. But again, things happen all of the time to people who are not what we would consider elderly by any means. So you do have to be at least 18 years of age and mentally competent to establish advanced directives for healthcare. If you're under the age of 18, that's going to be your parents who would be making those decisions. So there's 3 primary advanced directives for your healthcare: a medical power of attorney, a living will, and then a DNR, or a do not resuscitate. So you're going to want to make sure that these copies are kept in various places. So for example, you wouldn't just want to do this, you would want to make sure you've talked to somebody and they're okay in making the decisions, they know your wishes, and they have a copy of these documents, that you have a copy of these documents. Maybe they're filed with an attorney as well. And some of these, like a do not resuscitate, generally when you go into surgery or when you're admitted to the hospital, they will often ask you if you have one. And if you don't have one, do you want to sign one now? So anyone involved in your care, we want to make sure that there's copies where they're easily accessible. So thinking about where to start, again, thinking about beneficiary designations, and you think like insurance, life insurance, that kind of stuff. Anytime we have a change in our family, we may need to increase stuff. We may need to change beneficiaries, thinking about divorce, death, but we definitely want to use opportunities as we have them to remember to look at this stuff. So maybe at least once a year, check and make sure everything is still the way you need it to be. Kind of have like that financial checkup once per year, and that would include reviewing any of your beneficiary designations. For example, my husband with his life insurance, he had some of it going to his mother and some of it going to me. So when she passed away, then that percentage that would have went to her. He updated that to make sure all of it goes to me. So the durable power of attorney, I'm sorry, I've got a tickle in my voice this week in my throat. I think those Florida allergies are kicking in, so forgive me if I do cough. So durable power of attorney. There's many factors to think about when selecting a healthcare surrogate as part of this. So we want somebody that we could trust, somebody that understands our wishes, somebody who is assertive and they can truly advocate to get your needs met. And ideally, this is going to be somebody who lives near you. So you may think, okay, well, I'm in Florida, but my adult children are in California. They're literally on the whole other side of the United States. Well, it would be hard for them maybe to be able to get here very quickly. So thinking, generally proximity is better, but sometimes that might not always work. Could be a family member, could be a friend, but again, you trust them to make your decisions and to carry out your wishes, and you've told them what you want to happen when. And then we've got the one for our financial affairs, another type of power of attorney. So you got the health one I just talked about. Now this one is the financial one. So think about if you were to suffer a stroke, for example, and you were hospitalized for so many weeks and then you went to rehab. If you're like me, you probably have bills that need to be paid. So who could do that if you didn't have a spouse, for say, that had access to your money and to your checking account to be able to go in and to actually pay those bills? It could also be for investments to buy and sell securities, to cash checks, open close bank accounts, collect money. And these could be limited to a one-time event as well. So the health one too depends on how they're wrote. You could have this power of attorney go into effect just because you're literally in surgery and you can't make decisions and do this. And if something was to happen because of that event, who would take over everything? So they can be wrote up that way too, or it could be more for a longer period of time and wrote up more general. Another document that's really important is a will. So there's many factors to consider when selecting this and to really, think about the wills and, thinking about how you want everything distributed and who's going to get what. And sometimes when we start thinking about, like I said, our personal stuff, maybe somebody doesn't want your dishes, but maybe you've got a ring that's been passed down for generations that 3 children want. So, being very honest in those conversations. So it's not a surprise when that comes up, but thinking about, who's going to get what and what's going to happen. You can also name guardians for any minor children in your will as well. And then when you look at the will in Florida, you want to think about what is required for a will to be valid in Florida. And again, this could vary from another state. So in Florida, it has to be in writing. It has to be witnessed and notarized in a special manner that's provided by law. The person writing the will must be at least 18 years of age. And there must be sound mind when the will is signed. And it's going to still have to go through what's considered a probate process. But with a solid will, it's generally less time and easier to go through probate. So it has to be proved in and allowed by the probate court. So there's generally, it has to be 2 witnesses that have to sign in the presence of each other and the testator. And the testator is the person who's writing the will. So what happens if there's no will? So the terminology for that is called dying intestate. And basically, this is going to be governed by state laws, and your property is going to be distributed to your heirs based on state law. So if, for example, you have heirs, but you did not want to leave your estate to them, instead you wanted to leave it to this nonprofit that you've served on their board for 20 years, or maybe you want to leave it to the University of Florida. But if you didn't have that already set up and you didn't have a will, it's going to be based on state law, which means it's going to go to your heirs, and that the court would appoint a personal representative to manage your estate. So it doesn't go to the state of Florida, but it's going to go to your heirs. So it's a very rigid formula, and it doesn't really make any exceptions for any unusual circumstances unless you have planned for that yourself with a will. And if you do not have a will, the cost of going through probate is generally going to be more expensive because now the court is having to appoint a personal representative and they get a fee for doing that. The person does. So you're generally going to have more money deducted from your state to pay for those expenses. And then it's generally going to be more supervision from the court as well. So when you look at probate, they're looking at a financial account of your estate. So they're going to identify and gather assets of the deceased person. They're going to identify and gather debts. So creditors are going to come forward and say, hey, this person owes me money. I want to make sure that I get paid. So there's formal filings within that. And then once they've looked at everything to see how much everything is worth, maybe even a house has to be sold, all of that kind of stuff. They've paid off all the debt, then what's left would be distributed. Again, if you've got certain things you want to will to someone, then you need to do that as part of that will process. So in general, the decedent's assets are used to first pay the cost of probate proceedings, then to pay the decedent's outstanding debts, and the remainder is then going on to the decedent's beneficiaries. And the Florida Probate Code is found in chapters 731 through 735 of Florida statutes. And the rules governing Florida probate proceedings are found in Florida Probate Rules Part 1 and 2. So again, this only applies to probate assets. So if you had life insurance, for example, that does not go through probate. That's outside of that process. Anything that you transfer by a will, it's going to go, but it's going to go to who it's supposed to go, and depending on the actual asset of it. So probate assets are those assets that the decedent owned in his or her sole name. So think if you owned a car, for example, and nobody else was on the title to the car. Could also be owned by the decedent and one or more co-owners, but it's going to pass to that co-owner generally. It's just going to have to go through the court depending on how it's titled. So you have titled property and untitled property, and the titled property is what we're talking about going through probate generally. I would say you also need to think about how you have like savings accounts set up, checking accounts. Again, you can do all of this and set it up with the bank to where it's set up with your name and somebody else. And then it's going to be looked at differently with probate as well. Same thing for your savings accounts, things like that. So basically anything that lacked a provision for automatic succession at the owner's death is going to have to go through probate. And then the trust. Not everybody is going to have a trust, but a trust is a legal mechanism that allows you to put conditions on how and when your assets will be distributed upon your death. So it allows you to reduce your estate and gift taxes and to be able to distribute assets to your heirs without the cost, the delay, the publicity, all of that at probate court. When again, probate court is the one that administers the will, so it would stay outside of that. So in some cases, you can think about it that it offers greater protection of your assets from creditors and lawsuits. And there's different types of trust. We won't get too deep into it here, but if you're looking into that, you definitely need to think about the different ones, and the conditions is basically the difference. So at what point is it transferred, and at what point can whoever you're leaving it to as a beneficiary access it, are some of the conditions to think about too. So again, it can reduce your estate and gift taxes if it's set up into an irrevocable trust. Now, if you retain interest of it, then it's going to be included in your estate value. And this is what I'm talking about. There's different types. So you'd want to think about your goals for the trust. What are you trying to achieve? And then communicating your intentions. So thinking about, again, life is so big and it's so hectic and just going from the daily things, but being very intentional and communicating with our loved ones. Oftentimes we're hesitant to discuss this because it kind of seems like a morbid topic and we don't want to think about death and dying and what's going to happen. It's just not conversations that you would say would be a fun family conversation at Thanksgiving, for say. But they very much are conversations that need to happen because, again, if we're not thinking about it, we're not planning for it, it truly does leave more burden on our loved ones. And oftentimes, when they're in a very much emotional state, they're left to try to figure out what you might want to have happened. And, if you've got a number of children, number of grandchildren, there may be even some fighting over who gets what without those clear instructions from you. So being very clear helps to prevent these potential conflicts after we're gone. I know none of us would want to have any conflicts like that in our families after we're gone. And I know we would want to do everything we can to help ease this burden on our family members. So, one way that we can do this is to have a letter of last instructions. So, a letter of last instructions is an informal document and really one of the most helpful things that you can provide to your family. So, the letter should express your wishes following your death. So, the purpose is to give your personal representative or family member the information that they need concerning your personal and financial matters. And again, you really want to think about reviewing it at least on an annual basis. And the letter could also include like passwords to computers, as well as information on where to find specific personal documents, such as birth certificates, marriage certificates, adoption papers, documents related to automobiles or other titled property. And if you were to go, we're going to share some resources with you at the end, but one thing we're going to share with you is what's called an EDIS document. Link to that. There's a whole host of resources within that, including one on preparing a letter of last instruction. I've also got one up on wills, and it shows you if you die intestate or testate, meaning whether or not you have a will, the actual distribution of your property. So this is the first one that I mentioned, that Ask IFAS, powered by EDIS. You can go to that website and you can put in estate planning. And you're going to get quite a few that'll pull up. The Administration on Aging also has a lot of good resources, as does the U.S. Department of Health and Human Services and the Census Bureau. Nelly, do you have anything to add about resources? And I'll take a look at the chat and see if we've got any questions going on
It
too.
depends of the questions. I want to ask as well the Florida probate rules that you mentioned, if somebody's interested in that one. But as Dr. Gilling has mentioned, EDAS has so many publications, even if you are looking for mutual funds, for what kind of assets that you know the difference, all are there. Any type of information that you want to know, please feel free to ask. And these publications are in English and Spanish, so feel free to search for them.
I will also add there's a document, we don't have it in EDIS, but it's called Four Wishes. And you can get that through most hospice agencies, but it does give you a lot of good information and standard documents that are recognized here in Florida. Oh, thank you all for all of the happy birthday wishes. I appreciate that. And Nelly put in there, in Florida, DNR is on a yellow page. Yep, that is one of the Florida laws, that it has to be printed on that yellow.
Yep, I learned that by experience this year with my husband. Yes.
We had a question come through. What happens with tax refunds?
So this would be a tax refund after you're deceased. They're filing your taxes.
Yeah.
Like you passed away in 2025 and then they're filing your 2025 taxes in 2026.
Yes.
Yes, okay.
Yes. Mhm.
So then that would go into your estate.
Yep. Something that maybe Dr. Gilling that we need to mention is debts like credit cards that are in the name of your spouse. In case of your spouse is not here any longer, and these financial institutions coming asking for the debt, the other spouse is not financial responsible for those debts. So be aware of stuff like that are coming, and sometimes even hospitals, doctors that are coming for the state. Dr. Gillian is something that we need to mention. When the individual pass away and the bills continue coming in the mail, they go after the state. Be aware of stuff like that. That's the reason that we need to leave everything in writing for legal purpose for our family members and for our spouses and surviving family members as well.
I do have the EDIS pulled up. If anybody, I can put it up and show it for the estate planning one, your will that I had mentioned, just to give you an idea of kind of what the website looks like. And you should be able to see it now. Nelly, can you give me a thumbs up? You can see it. Thank
Yes.
you. Yeah, and this was the one I mentioned that shows you what will happen if you die without a will. It's a little hard to see, like pulling it up like this, but if you print it, it's a little more legible. And then what happens if there's a surviving spouse who dies without a will? And then one with no spouse.
Mhm.
And it goes through all of the information and gives you great stuff on preparing it and what to think about and all of that. And like I said, this is the EDIS that we were talking about. And if you literally go into the search and you put in estate planning, it's going to pull up a lot of things, including this letter of last instruction that we talked about. And you can go to our whole estate planning series.
Yep.
And this is that 5 wishes that I was talking about.
Mhm.
It's a great free resource as well.
I dropped the link directly to that one on the chat, and I also dropped the link to for the text question. I dropped the link to Vita. That they are correct me if I'm wrong, but I believe the IFAS works directly with Vita during text preparation season, and then
We
they
do. So it's
That's
Yeah.
volunteer income tax assistance, and
Yeah.
it's through the IRS, and they can help you file your taxes
Yeah,
and
yeah.
answer questions.
And in every county in Florida, there are nonprofit organizations that help as well with this. IFAS is one of those, and the other one is a United Way.
Yeah.
In
Yeah,
all
the
the
law school
67
here on
counties.
campus used to do it too. I don't know if they're still doing it because I actually used to train their volunteers, and then I was a volunteer for years myself.
I've also I want to plug a webinar that we have coming up on October 7th. This is separate from this 3-part one. We have preferred legal attorneys Brian Samuelson and Elizabeth Kaminsky. They are going to be hosting a 1-hour webinar, excuse me, on legal documents that you should have. So there are attorneys that work, prepare these documents, so they'll be able to kind of walk you through what legal documents you should have, when in your life you should probably start working on those documents, and how they can kind of help you for that. So if you're interested in kind of diving deeper into the legal documents, that's a great webinar for you to register for. And then we also
I'm
have,
sorry, Alba, may I mention something?
yeah.
I teach a relationship education, and a lot of people start to asking, when is appropriate to start to thinking in things like this? It's no later, we need to be proactive because
Yep.
things like diseases can happen, and we cannot control stuff at that like that. And sometimes they reach points that we weren't even thinking what happened. We need to be prepared. So it's not like to wait until we are 40s, until we are 50, 60 to things like that. We need to be proactive. And
Yeah.
if we have minors at home, we need to be very,
Oh.
very careful with things like that because accidents could be happen like automatic in a car accident. So please be aware of stuff like that. We need to be proactive in things
Hey,
like
I
that.
live in Ocala. I drive 75 every day, twice a day.
Here in Manatee County, Sarasota, accidents in the interstate every day. So yep, and severe accidents.
Okay, so the next webinar we have with you guys is on September 25th. Nelly, do you want to give a preview of what you are going to cover in that last webinar we have?
We are going to be talking about everything that is medical preventable. So we are going to be talking about senses. We are going to be talking about diseases related to the mouth, to the brain, cardiovascular diseases, osteoporosis, and as well as what kind of individuals we need to be start to be looking. Going to the primary physician is one of that, going to have our yearly appointments. So please come to share your time with us.
Great, yeah, and I dropped a link to the registration. That is next week, September 25th at noon, health and medical care. And the legal documents one is on October 7th at noon. So make sure you kind of catch those links and register if you want to grab more information for that. Any other questions before we sign off, or Nelly, Dr. Gillen, if there's anything else you guys would like to add before we say goodbye?
I will drop my email in here if anybody has questions. I'm happy to talk to folks.
It's our pleasure to offer the information for you. Please contact us in any moment.
Oh, that is too neat. How do you do that? All those little birthday cakes. How
Yes,
fun.
I think
it's
that's
the
a
first
new
time that you see
feature
them.
from
That is
Zoom.
lovely. It's lovely.
I think that's
Happy
a new
birthday,
Zoom
Dr.
feature.
Gillian. Feliz
Thank you.
cumpleaños.
All right, well,
Thank you,
thank you
everyone.
everybody, and thank you, Nelly, and thank you, Dr. Gillen, for the information. We really appreciate it. We'll have this recording uploaded to our YouTube channel within about a week time, and I hope to see everybody else next week in the next webinar. Thank you all. Enjoy the rest of your day.